Hi guys, welcome to Savvy Money Show. With me, your host Sean. Well, with everything that's going on in the market, are we talking about the Fed meeting this week? Are we talking about the futures going green? No, we're talking about Mate Kevin selling his stocks. That's all anyone is talking about. You have Jeremy from Financial Education giving his point, and I think actually his video was very good. I'm going to give my points, which are going to be a little bit different. I'm going to give the good and the bad, which I like to do with everything. Am I jumping on the bandwagon trying to get views? No, you'll see from my subscriber count and my view count, I'm just a tiny channel. I'm doing this because some people in my free Discord, which is totally free by the way, I don't charge, are talking about whether they should empty their 401k and do the same, or they should sell all their stocks and buy back cheaper. Anyway, let's get into it. As you know, Meet Kevin is a huge YouTuber. He's got just under 2 million subscribers. He went in the last couple of years from a couple of 100,000 in the stock market, his main investment was in real estate, to having 20 million and 50 million in the stock market. He's been completely transparent how high a margin he had to obtain this, and it's good that someone's transparent and says what he's doing beforehand, because too many people speak about what they're doing after the event. Now, another thing is, I appreciate the fact that he's, despite the fact he knows he's going to get hate for this, he's come out and he's told people what he's going to do, rather than, and he's been honest about what he's going to do, rather than the fact he could have just hid it all. But as he said, he has a transparency with his program, so someone would leak it anyway. Now, for those who are hating on him, remember, you are the guys who were following him when he was churning out multiple videos a day, when you had the political unrest, when you had COVID unrest, when you had everything to do with certain stocks you wanted to be updated with. And I know how hard that is, because if you look back through my videos, when I was churning out 7 a day, the quality was terrible. Not that it's much better now, but to put out that many videos a day is hard work. Now we're going to get on to the other side. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use, if you deposit a small amount. This is someone who, in his course and all his way along, he said, don't sell. No matter what, don't sell. If it dips, you buy the dip, you don't sell the dip. Now, he has criticised some hedge funds for shorting, and then he's gone and shorted himself. Now, by his own admission, he says, I haven't criticised them for shorting, I've criticised them for shorting when they've said they're buying. I'm not criticising the likes of Peter Schiff for shorting the market if they come out and say they're shorting the market. So I'll give him a pass on that one. But the fact that he sells a course for a lot of money where he basically tells people, no matter what, do not sell, and smash the sell button. And if the market dips 20%, you'll be paying 40% taxes anyway, and you'll have to make that up. You need to go by what you preach, practice what you preach. He waited until Saturday. Now I understand his excuse that to announce that he sold on Thursday and Friday. I understand his excuse that it took him 20 hours to put together a 37-minute video because he wanted to get his point out there, why he sold, rather than just come out and say, I've sold stocks. But he put out a video that took him 20 hours on Saturday, and then he had to put out another video this morning, or which is last night for him, to explain it again in more detail. My point is, if it's taken him 20 hours to do a video to put his point across, that wasn't well received, so then he's come up with what he considers more information, or more in-depth information that he didn't want to give out. If he had come out, he could have come out with a 5-minute video. I'm selling a huge amount of my position. It could have been a 5-minute short and say, I'm selling a huge amount of my position so I can buy back in later. I will come out with a video explaining it. He could have come out with a short like that. It wouldn't have taken him 20 hours to do it. It would have taken him 10 minutes to do. But still, and it would have been like letting people know he's going to come out with a video. Instead, he's had to come out with a number of videos because the videos aren't well received. He's received a lot of hate, and I understand the hate he's received. But as I said, he's gone from a few 100,000 to multiple millions. Now, with hedge funds, majority of hedge funds, their first priority is not to lose money. After that, their second priority is to make money. Once you've gone from a few 100,000 to 20 million, 30 million, 40 million, 50 million, and you're in the downtrending market, and you've done it so quickly, as Jeremy has said, and not over time, of course you're going to be worried about losing that money as quick as you've made it. So of course there's going to be a temptation to take that money out. So if he had said, I'm taking profits, fine. But he's saying, I'm selling because I think it's going lower. I'm going to try and time the market. Then he's come out again and said, I like trading. I was a long-term investor. All of a sudden, I've put a small percentage of my portfolio into trading, and guess what? I like it. After telling all his subscribers over the years, trading's a mug's game. You don't just flip a switch like that. Now he's saying how he thinks it's going to be mother of all short squeezes, like an AMC, GME type short squeezes on multiple small caps. Well, that's fine. But then you don't pull all your money out and start shorting the market. You take your money out of certain stocks, you move it into small cap stocks, if you're that certain. But he's trying to time the market. He's using the Great Depression. He's using 2008. He's using the dot-com bubble as an excuse as to why we should be doing this. But what's different between now and the Depression is we've seen the Fed, if things get too bad, the Fed will come and rescue the market. I'm not saying they're going to, but if it does get too bad, we've seen it before. That's their job. Now, his other excuse was Warren Buffett hasn't been buying the dip, which means we're not at the bottom yet. But Warren Buffett wasn't buying the dip the crash either. When the stock market crashed, he actually sold. So I don't think that is a valid reasoning. It says Snowflake Palantir is the same kind of valuation as Snowflake. When Snowflake is, as someone says there, Snowflake is much higher than Palantir on valuation. Palantir has $2.5 billion in cash on their books, if I recall, less than $1 billion in liabilities, which should be paid off this year. Palantir have invested in gold for a black swan event. They have invested by piping SPACs, which I know are not in favour at the moment, and they have a unique business model. I am not in Palantir at the moment, by the way. This is an unbiased view. I have done a video saying how I'm considering getting into Palantir soon, and I do think Palantir has come down to an attractive level. The same as NNDM. Now, there's a company with $1.4 billion in assets, 26 million in liabilities, 1.1 billion in cash. And it's an $800 million market cap. They could buy out their own shares and have money left over to pay off their debt and still operate okay. And yet Kevin is saying he's got a look for these small caps that he wants to get into. You know, he's saying anything over 30% he's going to squeeze, and yet he's named a number of stocks that have over 30% short interest, such as Tattoo Chef, that he believes are going to go down even more. Well, the thing is, if they're going to go down 10-20%, as I said, why are you not buying them? Because if you're going to make 2 or 3x, a 10 or 20% downturn would surely be offset by a 2 or 3x. I've seen this before with a major YouTuber in 2020 was certain there was going to be a double crash. He pulled his money out of the market. He had a massive following at the time, pulled his money out of the market, kept waiting for a crash, certain there was going to be another crash, and he ended up having to get back into the market. It cost him an extra $10 million, and he lost all his subscribers. Not all of them, I'm sure, but most of them. I mean, he started doing videos of himself having lunch instead. Sure, me, Kevin wouldn't do that, but the thing is, number one, we should appreciate his honesty and his transparency and his hard work over the past couple of years. We should also put ourselves in his position. If we had gone from a couple of 100,000 to 20-30 million in stocks, how we would feel if that value was declining. Also, if you're worried about tax changes, you could come out and say, well, I'm positioning myself so I can pay off my taxes if need be, if it goes wrong, and if it goes right, well, I'll be set, you know. But I think the way he has worded it is the reason he's got the hate. I'd be interested to know what you think. You know, I understand why Jeremy has said what he said. I thought Jeremy did an excellent video. I understand his reasoning for this. I've said myself, I think small caps will run before anything else. But the way he has said it has panicked some people. I've had some people contacting me saying they're thinking of pulling their money from their 401k. And, you know, I'm not a financial advisor. I cannot say to them, don't do this. I just say to them, are you sure you want to do this? Because you'll take a 20% hit on this plus anything you've lost on the shares so far. And I've got people saying on stocks that they had conviction in, they want to sell them so they can buy them back cheaper. Saying, well, if you've got high conviction in them, and you think they're going to go higher over the next couple of years, why do you not just stay in them? And if you have money on the sideline, why are you not waiting and averaging down? If you're so sure it's going to go down. Anyway, I'd like your opinion. Am I talking out of my arse? Or do you think me, Kevin, is looking to 10x his value again? If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.